He's ready to play now. This morning he woke up at 5.
Is NBC2 News live at 5.
And welcome back to NBC2 News live at 5. Andy Stadler is here for another Tuesday tax tip segment. Thanks for being here.
Thank you.
And you've got good news. We do not have to pay our taxes this April 15th. That's great. What's the catch?
April 18th is our new day this year.
Oh, we still have to pay them. It's just
That's
delayed.
right.
Okay.
Just 3 days, but that's 3 days you got your money.
I was going to say, what's the reason for that?
The reason is in Washington, D.C., and only in Washington, D.C., they have a special holiday that the federal government's closed, and so that extends the date to April 18th.
And that's extended for all Americans?
All Americans.
Okay, good to know. As we talked about before the break, a lot of people have questions about dependents and exemptions. What do you want them to know?
Well, a dependent, typically to claim a dependent is normally your child. It's usually under the age of 18 in school, or it could be under the age of 24 as long as they're in college. What you have is a three-part test you need to look at. Now, this is not covering everything, but this covers most of what a dependent is. The first test is, are they related to you, either by blood or by marriage? The second test is, do you support them more than anyone else, including if you get food stamps or welfare or something to that effect? And the third test is, are they a U.S. citizen? As long as they met all three of those tests, then you do get to claim them as a dependent.
Okay. And is there something about the exemptions? What's different between an exemption? Are there exemptions for dependents, or is that separate?
A dependent, it's related.
Okay.
A dependent is an individual or a child you're claiming on your tax return, which gives you the exemption. The exemption is $3,650 per dependent. That's the amount of deductions you get. And one thing you got to really remember, though, is if you're filing a joint return, your spouse is never considered your exemption or your dependent. They're considered your marital spouse.
I think my wife would consider me a dependent, though.
Really?
I don't know, maybe not tax-wise, but as far as dependents, you get the exemptions there, but isn't there a tax credit for dependents as well?
There can be. There can be a child tax credit if they're a child under the age 16. There can be some earned income credit for that dependency if they're a child. If they're a parent or it is a spouse, you're claiming the exemption on this spouse, then you actually get the $3,650 additional exemption on your tax return as well.
Okay, good to keep in mind. What other type of exemptions should we be thinking about going up to April 18th?
Well, if it's your dependent and you're claiming this exemption, be sure to, if you're claiming them and they are also earning wages, they're a high school student, they're working at a fast food place, they also need to file a tax return as well. If they had any federal taxes withheld, then they will certainly get that back. In addition to that, if they're also dependent, then they can also be claimed. They may also qualify for some other the credits, the child tax credit, the earned income credit. So you want to be able to be sure to look and see what all you qualify there.
So if you do, as you said, if you have dependents who've made some sort of money, income, they have to claim that, but only if it's over a certain amount, right?
Well, if a dependent is earning less than $5,700 or single and earn less than $5,700, then technically they do not need to file a tax return. But if they did have any federal tax withheld, then they certainly want to so they can get back that federal tax.
Okay, good point. So
Okay.
if it's a job where you're getting taxed already, you might as well get that money back.
That's correct.
What else should we be keeping in mind as April approaches?
Well, even if you earn, when you look at filing a tax return, as a married filing a joint return, a married couple filing a joint return, if your total earnings is less than $11,000, technically you do not need to file a tax return. But if you are working outside the home where you got a job, you will qualify for a working tax credit. If you have children at home with you, you'll qualify for earned income credit. You'll qualify for several other credits, so you'll probably still want to file a tax return. The state of Indiana's requirements, though, is if you have wages or earnings of more than $2,000, then you need to file a state tax return no matter what. Even though you may not need to file a federal, you still will need to file a state.
Okay, good to know. And if you have any more questions for Andy, you can call his Terre Haute office. The number is 478-2800, or the toll-free number is 1-800-447-2015. And for more on their services, go to our website, mywabashvalley.com, and click on the Valley Expert page. And if you have any more questions, just let us know, because Andy will be back next Tuesday and each Tuesday up until tax day, right?
That's correct.
All right. Thanks for being here, Andy.
Thank you.
And now here's Tom.